What's up, everybody? It's Josh here, and I'm just making a video today explaining exactly what I do, how I trade, and how you can too. I know I've gotten a ton of questions in my personal life asking how I do, how I've gotten the returns that I have. So I'm turned roughly a grand into, right now I'm sitting at $10,256.10. And I did that in about a month roughly of taking trading seriously, and I do this pretty easily. It's a lot of hard work, but once you get the formula down, it gets you get into a pattern and it gets easier. But I do not want to say that this is easy. It's definitely a hard path to learning how to do it. But once you do, it's really what you can do with it is limitless. I sit on the beach and I make money. It's the greatest thing. It's the best summer job. So, I'm a broke college student. I'm a student athlete. I don't have a lot of time between, practicing, doing all this. So I didn't really want to work a whole summer job that was going to take a lot of time away from me. So I really started getting into this, and it's been very profitable. I've made more money now than I would have had at any job. So it's been great. And I'm going to show you exactly how you can do this and how you can do it too. Exactly. So basically what we're going to go over today is exactly what I trade. So I trade options. So I'm more of a trader than an investor. So there's two types of people. There's an investor that's going long term, that's mainly trading shares of a company, and there is a trader that is taking small gains, small time increments. Okay. So I usually trade weekly. So I trade intraday. So I'll go over to Eli Lilly. It's a great company. It's a pharmaceutical company. It's the world's leader right now in Alzheimer's drugs. The FDA just approved it, so I traded that heavily this week. So I'll show you exactly what I mean by I'm a day trader. Go down here to my history. I'm showing you guys everything. I'm not cutting anything out. This is purely what I do. All right. So if we come down here, so my first ever Eli Lilly call, I bought for 14.50 and I sold for 19.05. And actually, I did that on the beach. I remember specifically. So that's about a $500 profit for really nothing. And I bought it one day on June 12th and I sold it the next day on June 13th for a profit. So see, I trade in one day. That's what a trader is. And we come up here, my other call, I bought for 730 and I sold for 2200. So that's about a $1,500 gain. And again, I did that the same day. So that means I am a trader. But people are also investors. So as an investor is when you mainly buy shares of a company. So I invest heavily in a company called Palantir. I'm very high on them and I appreciate what they do. They're an AI company, so I believe that they're going to skyrocket. So I currently have about 1,300 in here. My shares are at 25.88, my average cost, and I have 50 shares of them. So I don't sink most of my money into shares, obviously, because I explained it, I'm a trader. But investing is also good because you don't want to have your whole portfolio in one specific type of investing. Because what happens if I make a bad trade and I lose money? I don't want to lose it all. I want to still have some money to fall back on that I have invested. So you need to keep a healthy balance, but you need to know what you mainly want to do if you want to become a trader or an investor. And I'm a trader, and I'm going to explain to you guys how I do that, but I'll also explain a little bit more investing. But today's video is going to be very surface level. A lot of people in my personal life have asked me, how I do this, so I'm not going to get too in depth. I'm going to make a second video though, explaining exactly how to trade options and when to and all that. I'm also going to be making a bunch of videos on what specific stocks to do that on. So update you like every other day or weekly on certain stocks that you should be trading or what I think is going to boom. So what you're going to make money on. But today is just going to be what I do. And if you think that that's something that you want to get into, then I'll make a specific video on exactly how to do it. So what I do is I trade options, like I explained. So now you're probably thinking, what is an option if you've never heard of it? So we'll start actually back to what exactly you're seeing. I am on the website called Robinhood. You can also download it on your phone. It's a great company. Now, what I'm going to cover today, you can do on pretty much any investing software or app, but I'm doing it on Robinhood. I recommend that if you're just starting out. It's pretty user friendly, so I would recommend that, but you can do this on anything. So here, we're going to go pick a stock. Let's go Nvidia. It's the biggest stock arguably right now. It kind of runs the market. If you look all time, it's made about 16,000%. That's insane. So we're going to go to trade options down here. You're going to see a trade options button. Trade options. Now, you're going to see a buy, a sell, a call, and a put up here. We're going to focus on that. So I don't mess with selling. You can sell a call and a put, and you can buy a call and a put, because sell requires you to have 100 shares of a company. And often, at least the companies that I'm trading, they don't have the capital. This capital is amount of money, if you're not familiar with the term, to have 100 shares. So I don't mess with the sells, and I think they're less profitable. But honestly, if you have that kind of money, go for it. But I personally don't, so I will not be going over that. So I'm going to stick to just buying. So you have a call and you have a put. A call is when you think the company is going to go up, and a put is when you think the company is going to go down. Okay, so we'll focus on calls for now. So over here in the left, you have a strike price. I have this highlighted right here, a strike price. That's where you think the stock is going to go. All right, so it's at 125.38. Let's say I am bullish on the stock, which bullish means you believe the stock's going to go up. Bearish means you think the stock's going to go down. So if you hear those terms and don't know what they are, now you do. All right, so the strike price, we're going to say we'll go with a 128. So we think it's going to get to 128. Now, because we're buying it for $2.14, but first I should explain though, when you buy, you're buying 100 shares. So you're buying 100 shares at 214. You're buying the contract for those 100 shares. So it's actually $214. So because we're doing that, it needs to reach 130.13 for us to break even. So let's go to a contract that I have specifically, okay? And I'll show you exactly how that works. All right, go back. I'll show you my a little before that I got going here. You can see everything I have right now. So go to a Nike call that I have right now. I've made money on this call. So come over here. This is what a call looks like. As you can see, the call is going up and down. Just like how a stock goes up and down, your call goes up and down based on how good or how bad the stock is doing. So over here, it's valued at $320, this contract, okay? And my average cost, so I have about, let's see, I have 10 contracts. So I paid average of $27 for the contract. So I spent $270 and now I'm up to 320. So my total return is $50. All right, so we're going to simulate my returns. This is basically simulating what I would make. So if Nike stayed at the price right now all the way to the expiration, which is over here on July 19th, I would lose the full 270 I put in because it hasn't gone up. Even though I'm making money here, I'd lose money here because the longer you hold an option, the less value that's going to have. But the thing is, you hold an option if you are going for a longer call, which I'm going 3 weeks out. You hold that because you believe the stock is going to go up. So it's going to make the most money if it goes up right now. But obviously, we're never really going to have it right at its peak. That's just not realistic. So sometimes you're going to want to hold till about the middle of the contract to see what it's going on. But if it's not going to reach where you want it to reach, you're going to want to sell it to minimize your losses. That's basically exactly what a call is. Okay. It's pretty simple. So you think a stock's going to go up, you buy a call. All right. If you think it's going to go down, you're going to buy a put. So we'll go there. View all. All right. So we'll go to Nike now. See, I have contracts on there. So it's +5. I have 5 contracts. It's 1. I have a contract there. So I'll show you a put. Put is exactly the same thing I just explained, but it's if you think it's going to go down. Okay. So I could buy, I think it's going to reach 76. That means it needs to lose about 0.7% or 0.70% for me to make money. But again, you can make money 2 seconds after you buy a contract if it goes up or down, depending on whether you bought a call or a put. It's just you can hold it to expiration, try to make as much money as possible. But you make the more money if it goes up or down the sooner you bought it. So now you can also buy what they call in the money plays. So see, the share price is 75.41. I could go all the way down to $70. It's a lot more expensive, but it only has to go up 0.42 for me to make money rather than 5%. Obviously, like I said, it doesn't have to go up the whole 5%. If you bought a 79, all it has to go up is just a little bit, and you're price is going to go up. It's just we're talking about break even is at the expiration date. So here, you only need it to go up a little bit more, start making money. And obviously, the more expensive you buy a contract for, the more money that those are worth. So obviously, the higher it goes up, the more you're going to make. So if you buy something for, a cent a share, so that's about $1, you're not going to make too much on that, even if it does go up. So you want to I typically stay around the first three on each one. And if I'm really high in the stock and I think it's going to shoot up like 6, 7, 8%, I'll buy a little bit up here. But if I think it's just going to make a small move, like a little bit, I'll buy in around here. And scared money doesn't make money. So you have to be willing to spend the money to make money. All right. So this is basically exactly what options trading is. You are buying an option on a company and waiting for that contract to go up or down. And it's fairly simple, but that's just a really general way to describe it. I will get way more in depth in a different video on exactly what you need to do because it's a lot harder than just buying and hoping it goes up. We're not gamblers here. We are making smart money plays. So I'll explain exactly how to do that in a separate video, but I just wanted to get on here today and explain exactly what I do and how I do it. So I trade options. I'm a trader. I'm not a long-term investor. As you can see, I have a little bit invested, but for the most part, I am not long-term. So I just wanted to come on here and say that. Thank you guys for watching. I appreciate you for coming out. This is my first video, so bear with me, but I will get better as time goes on. And I appreciate it. So if you are interested in seeing another video, please, leave a comment, subscribe to my channel. I'm going to be making more videos, and leave a like. And thank you all so much for coming out. I really appreciate you all, and it's been a pleasure talking to you guys today.